Hi believers, this is Amit from Waya team, and I'm here to provide a weekly bite and the road ahead in the markets. In the week gone by, the Nifty and the Bank Nifty traded within a narrow range. However, positive global markets led to a gap up opening in the last trading session. The Nifty posted gains of 0.7%, while the Bank Nifty remained flat. The small and the mid-cap indices also followed global sentiments, closing the week on a positive note. The mid-cap index gained 0.84%, and the small-cap index ended positive. It was a result-driven week, and mid-cap and small-cap earnings continuing to outpace those of large-cap stocks. However, stock prices are being held back by valuation concerns. Nifty 50 stocks delivered only 4% year-on-year growth in Q1 FY25, marking the lowest net profit growth since June 2020. Notable contribution came from healthcare and capital goods. Meanwhile, small cap and mid cap earnings continue to outperform their large cap counterparts. Sectors like renewables, data centers, and recycling remain our top performers. We maintain an optimistic stance toward companies in these industries. The rural economy is showing signs of recovery, backed by good monsoon and largely due to government spending in the recent quarters. This has led to rise in agrochemical company stock prices. However, in our view, this trend is not sustainable and we suggest not to invest in this segment. From a technical standpoint, Nifty's immediate support is at 24,400. It's important that Nifty holds this level to maintain momentum in the coming week. Below this, there may be a fall towards 24,200. On the upside, we see a potential up to 24,750. On the valuation front, most of the stocks in the Indian market are trading at very high and premium valuation. During such period, we recommend to be cautiously bullish, as these scenarios often result in smaller price correction along with time correction. Coming to the news from Indian economy, India's CPI inflation in July 2024 stood at 3.54%, which is the lowest since August 2019, while IIP, India's industrial production, records a growth of 4.2% in June 2024. Inflation in the food basket also declined to 5.42% in July compared to 9.36% in June, which has held back RBI from easing interest rates. Further easing in inflation should lead to lowering of rates towards the end of this year. On the global front, the havoc caused by the carry trade reversal appears to be subsided for the long time being on the international scene. The US VIX has dropped back to 15, which suggests that the US financial markets are stable. The S&P index have returned to its previous levels following a significant decline. It is anticipated that the volatility will persist as the US presidential election draw closer, while the higher crude oil prices can be a negative headwind for the domestic markets. Geopolitical tensions in the Middle East have not yet reached the point where they affect the financial markets. Key takeaways for the coming week: any decent fall in stock prices, if it occurs, will be a healthy and offer many opportunities to enter high growth stocks at good prices. So investors should be both cautious and opportunistic at the same time to make the most of the scenario. Keep in mind, Q2 FY25 is a monsoon quarter, so 75 to 80% of the sectors won't see QOQ growth. It's very common for Q2 to lag behind Q1. That's all for today. Wishing you a happy trading week ahead. Thank you.